Nvidia topping estimates on the top and bottom line for the fourth quarter and providing an upbeat outlook. The shares have been bouncing around. Right now, they're up almost 2%. The options market was expecting Nvidia to move 10% in either direction on earnings. That's what it was pricing in. Here with a closer look at sentiment on Nvidia, we've got Jessica Inskip, stockbrokers.com, Director of Investor Research. Jessica, it's good to see you here. So, we've really had the shares kind of feeling indecisive, although settling a little more solidly into the green during the call here. How is options activity leading up to the earnings sort of playing out now that we've got them?
Well, I think it's so interesting. The options market was actually very correct if you take a deeper dive. So when we're looking at the implied move, which is something we utilize, that's just looking at almost a similar calculation to the VIX. That's just the uncertainty that's priced there. If we're to pull about a year ago, we actually have a 75% increase in total options volume from this time last year, which I think is so interesting. But when I'm pulling those moves or seeing where there's positioning, I want to understand, okay, if we are long and we're bullish, because options can also be sold and be bullish or sold and be bearish, we have to look a lot in the detail, and it is only ever so slightly bullish, and which is exactly what we're seeing after hours.
Give me the trade idea, Jessica.
Yeah, so what's interesting in the way that I like to play this, options, because of uncertainty, are priced with more than just the underlying security. It's implied volatility. Implied volatility is amplified around earnings. So what we would do is create a short iron condor. I know that sounds complex, but it's a volatility play, which is an extrinsic value decay, which happens once uncertainty is removed, which is earnings expectations. So what we do is we take that implied move. Nvidia closed around the 131-ish range. So we go 10% up, which is that move, 10% down. We essentially create this range where we have our credit call spread on the top and our credit put spread on the bottom. A credit put spread is profitable as long as you close at or above the strike, and a bear call spread as long as you close at or below the strike. So essentially, what Nvidia is doing right now, as long as it stays within that range, which is 118 to 145, 10% up or down, you capture this credit, have very minimal risk. It's so skewed in your favor around this time frame, and are profitable capturing that full credit.
Well, and Jessica, remind me, what's the time frame for that?
So you could do this in a lot of time frames. I prefer around 30 to 45 days because whenever we're selling options, because options have that time premium associated with it, I also want to optimize that as well. And a really great example of this type of normal trade, if we were to do this tomorrow or not around earnings, we look at a risk to reward ratio, usually of a 3 to 1 or a 1 to 3, meaning if I capture a credit, I'm going to end up losing about 3 times because of the probabilities. In this case, it's a 1 to 1. That's what I mean by risk reward is so skewed in your favor. It's such a complex trade, but all we're doing is creating a range, selecting about 30 days out to capture theta decay. You get a credit of about $500, but your maximum loss is also $500. Whereas in a normal environment, it would be your maximum gain is $500, max loss about $1,500. So that's what I mean by skew risk reward heavily in your favor because of amplified options. People are betting on direction. In this case, you're choosing the highest direction and assuming that it's going to stay within that range, which is what's happening right now.
Jessica, I'm curious, when you look at the charts, what do the technicals tell you right now for Nvidia?
Yeah, that's so important, and I think it goes into the overall market. So when I look at the charts, I love to look at a longer period, and I use weekly intervals. And I'm looking at the 13, 26, and 40 weekly moving averages. The reason for that is we're looking at the market quarterly. 13 weeks is roughly about 1 quarter, 26 to 43. Nvidia is actually sitting in between those weekly moving averages, so 1 quarter worth of prices and 3 quarters worth of prices, which means this is a decisive moment for Nvidia. The technicals are saying we need a catalyst of some sort to get us out of this range bound that we found, and the moving averages are certainly mirroring that. So actually, tomorrow, once we get some activity, I would love to see a weekly close above 135. That will put us above the 13 weekly moving average and put us back into a better position to rally and hit new highs.
Jessica, appreciate your time in the trade. Thanks for joining us.
Thank you.